Hello everybody, Jeff Fitzpatrick of Forex Trader Magazine, and I'm going to talk to you today about the psychology of trading. Those that are following my training course, How to Trade Forex, are now looking pretty good in terms of being able to make some money. And there are a number of psychological factors that kick in. So while you're riding this rocket ship of making money, you need to begin to think about where it's leading and what happens next. So how many trades does it take to double your money? Let's start off with equity of 1,000. It doesn't matter if it's £1,000 or $1,000 or 1,000 of any other currency. That 1,000 would let us make trades on the principles that I teach of 1,000 times 0.0006 or 60 cents, 60 pence, whatever it is that you're working in. A tiny amount compared to the £1,000 of equity, but an amount that I consider to be very safe. With an average gain of 50 pips per trade and sticking to that 0.006 figure, the compounding gains would give us something like this. So we start off on the left hand there with $1,000 or £1,000, whatever it happens to be. We put a trade on of volume 0.6, so in terms of what I'm doing, that's spread betting, and it's 60 pence or 60 cents per pip of gain. Doesn't matter whether we're talking about a buy or a sell at this stage. So that would give me a gain of 30 and the new equity of a 1,030 going forward. If I keep that moving, you can see that after 7 trades I'm up by 231 units or 23%. Now 7 trades, depending on how I'm trading, could be extremely small. 7 trades could be something like a day, or it could be a month, or it could even be a longer period than that. But I certainly have traded in a way that gave me as many as 40 or even 50 trades in a single day of scalping. If we continue this on, after 14 trades, I'm up by £514 in my case, 51%. And again after 21 days I'm now up 860 or 86%, and it takes in fact 24 trades using these terms, 0.0006% of equity as the trade volume and a gain of 50 pips to get to double my money. So I've gone from 1,000 to 2,033. However, if we don't stick exactly to that 0.006, and I'll tell you now I don't, I always round up to the nearest 0.1, and that would give me 23 trades to get up by 1,050 to or 105%. However, I used a modest gain there of 50 pips per trade. The live trading experiment that I run on Forex Magazine's website on the blog, which is www.forextradermagazine.co.uk, would give me results like this. And these are now actual results. So after 7 trades and using a minimum of 1 as my volume, and gains in the first one I got 48, so I've obviously got 48 pips of gain. Second one is 48 pips of gain. My third trade I got 100 pips of gain, as I did in my fourth, and then on the next one it was 78. Now by the time I get to trade number 6, my equity is up to 1372.4. At that point I decided to up the ante again, still having it pretty small at 1.5, and I then got a gain of 150, so I made 100 pips. The next gain gave me £95.70. So at the end of the 7 trades I'm up by 61, nearly 62%. 9 trades that I've completed by the time that I actually recorded this video had me at a gain of £689, or let's call it 69%. The average percentage of equity that I used there for my volumes was actually 0.00073, so it certainly wasn't huge. The average gain that I had was 63.17, and that's pips. Now, the very last trade I did, I actually came out at a very low level and very quickly because there was some major news due out. But even so, I left that trade in the calculation. So assuming these figures continue, we'd get something like this. So having done already 9 trades, we now get to an extra 4 trades, which are the trades we can see here. And it took, therefore, just 13 trades to get me to equity of 2,068, so up by 106%. Now, that's pretty good, but that's what I actually did, and that's not unusual at all. In fact, I believe that's quite modest. But if I scale that growth rate up, then after just 130 trades, bearing in mind I have done as many as 40 or 50 trades in a day, my gain would have been over £1 million. 1,024,000 to be precise. But believe me, that is just not going to happen. Just doesn't work. But why not? Well, the short answer is psychology or emotion. We would end up placing huge trades and requiring huge gains before closing the open trades. We'd also not have taken any money out of that account. So imagine starting trading with £1,000, getting it up over £1 million and not actually taking any money out. It's not going to happen. So I consider that it's better to recognise this and to have a strategy for making withdrawals and for keeping things under control. I tend to choose a figure, an amount of money to leave in my trading account, and then to harvest reasonable amounts over and above that level. For example, starting with £1,000, I may choose to leave in, say, £5,000. So don't take anything out, let the account build up to £5,000, and then when we get more gains over and above that, for each 1,000 or so that we get, take that £1,000 out. That's a perfectly reasonable strategy. In due course, I did get bored with that, and I decided that I would let that 5,000 build up a little. So every now and then I would leave an extra 1,000 in the account and then take another 1,000 out over and above that. The pot eventually would build up to something like, say, £15,000 that you would leave in the account and only harvest gains over and above that level. At that point, you may also choose to increase the excess. You might say, well, okay then, once we get over 5,000, I'm going to take out amounts of, say, 2,000. And you could leave a little bit extra in the account and again let it build up. In my case, I actually started with £1,800 and eventually I pulled it back and I sat with a trading pot of £40,000 and not much more. So every time we got significantly above that, I would take it out. I found that above the level of 40,000, psychological and emotional factors began to affect my trading decisions. Of course, we're all different though, and the level at which psychology and emotion kicks in for you could be very different. It could be significantly higher than that. You might have nerves of steel, or you might be a complete wimp, as we would say in the UK, and you might be very uncomfortable at a level significantly below 40,000. We're all different and we need to recognise that. We need to determine what is right for us, and also we need to build this up slowly as we gain confidence and trading skills and experience.